This mystery analysis is a companion to the Assumption Hackers Advantage newsletter article entitled Consumption Assumption, sent in February 2024. The story is about Red Lobster, who decided to offer an all-you-can-eat shrimp special deal every day during the week rather than just Mondays as they had done previously. Their aim was to increase traffic and improve their financials during the slower fall and winter months of the year. So let's start the mystery analysis. We start with steps 1, 2, 3, which are describing what was done, what was the effect that was desired, and what was the actual result that happened. So they offered the ultimate endless shrimp every day instead of just Mondays. And they expected more traffic, better financials. Now, I made a little note in here for you. None of the articles that I read mentioned what they were really expecting in terms of traffic and in terms of financial performance. They did expect it to be better though, so we can go with that. What they actually got was a very slight increase in traffic, only 4%, less than they had hoped for, but at least it was something. And the big deal was that this slight increase in traffic was accompanied by millions in losses. This is the biggest thing that took them by surprise. So now we'll move to what was their working assumption? What must they have been thinking when they decided to put this offer in place every day of the week and as a result of that expect more traffic and better financials? Well, it turns out there had to be two assumptions. One that would lead to more traffic, one that would lead to the better financial performance. In order for this offer to result in more traffic, they had to assume that more people would come as a result of the offer. And they had an example. They offered this deal on Mondays, which is normally the slowest day of the week for them. And this offer had proven over the course of 18 years to actually bring them the improvements in traffic. So their assumption that more people come to Red Lobster when all-you-eat shrimp is offered, they assumed that would hold for the rest of the week and be able to bring more people in. The other assumption that they had to have made was that the other items on the menu, the other higher priced items on the menu, would remain compelling to the customers who are already going to Red Lobster during the other days of the week. And this is the assumption that seemed to be the more faulty of the two. Let's take a look at why. So speculated cost. So now we think about, all right, what would the cause be? If this assumption is invalid, what would have to be the reality instead? The reality instead would have to be that the all-you-can-eat offer, which was at least $5 less expensive than other meals on the menu, that all-you-can-eat offer was actually more compelling than the regular items on the menu that customers otherwise enjoyed when they would go to Red Lobster during the week. And so what happened was their existing customers, the folks who already went, actually switched from more expensive items on the menu to this amazing all-you-can-eat shrimp offer, which was offered at only $20 for the shrimp, the sides, more shrimp, and more. So if that was the case, then what would be the effect that we would want to see? In the newsletter, I showed some math that shows if they even with only a slight shift in the buying patterns of their existing customers, they would need to have many, many, many more people coming in than just the 4%. And they couldn't really afford to have too many people at all make the switch. Every time somebody who was already going to Red Lobster ordering more expensive items, any of those who made the switch would result in several dollars less going to Red Lobster's bottom line. What happened was exactly this. That all-you-can-eat offer was super compelling even to their existing customers who went throughout the week, a much larger percentage of customers than they ever anticipated switched from whatever they were ordering before to that ultimate endless offer. And as a result, they lost millions. They attributed this to the nearly $11 million loss they had in the third quarter of 2023. So now, given this understanding, and they reflected that they got it, that they had too much of a shift in the mix that people bought, they made some decisions. The decision that Red Lobster made was to increase its prices. They said, yes, we're showing that this offer is bringing in at least some more customers. 4% is nothing to sneeze at in a market like theirs, but they needed to increase the price so that they wouldn't be losing money the more people that came in and ordered accordingly. And the other thing that happened, unfortunately or fortunately, you can decide, is that Thai United, this company that has a pretty significant stake in Red Lobster, actually just announced in the last few weeks that it was planning to divest in its share of the Red Lobster company. Both of these companies, both Red Lobster and Thai United, are expecting, as a result of these new decisions that they've made, Red Lobster is expecting that they're going to retain the business and they're going to improve their bottom line. And Thai United is also expecting to improve its bottom line by actually making the decision to get out of the Red Lobster business. This is just an example of a mystery analysis. I would love for you to share, what would you do if, I'm not asking you to turn back the wheels of time. It's always easier to, know what to do based on hindsight. But what would you want to do going forward? How would you want to make a shift? If you were in Red Lobster's shoes, what decision would you want to make, given what we understand now about the faulty assumption that they've made?